Dariusz Kowalczyk, who is Chief Investment Strategist at CFC Seymour. Dariusz, thanks for joining us today.
My pleasure.
Now, worth noting, this was 1 month alone, and it was August, a pretty tumultuous month. What do you read into these figures?
Well, they are quite disconcerting because people are worried around the world that global investors will turn away from U.S. financial assets, and if they do, how will the U.S. finance its huge current account deficit? But like you said, it was just 1 month data. Maybe because this was the crisis peak and prices were really high, those investors faced some maturities of treasuries that they were holding, and they didn't want to immediately roll over their investments. They might have rather preferred to wait until the crisis abates and then buy them cheaper. So it is possible, and I think we need to wait for next month's data to make sure if we are looking at the beginning of a trend or if it was just a one-off event.
Now, even if September's figures are weak or fairly neutral, does that suggest a trend? Do we going to have to wait a couple of months before we really understand what's going on?
Well, if September data shows that Asian central banks continue to be net sellers of treasuries, then I would be concerned. Because, in fact, when you look at the second and third quarter combined, some of these countries, such as Japan, were net sellers not only in August, but even between April and July. So there are some signs suggesting that they are really diversifying away from the US dollar, which means that they would be selling treasuries, and that we may be facing a more aggressive push into other asset classes. But, like I said, the signs are not very clear yet. Let's wait for 1 more month.
How much of a factor is our sovereign wealth funds likely to be in this? China Investment Corporation just getting established. They can't be a big player right now, but that may suggest to other players in the market that it's time to move into other assets.
That's true. I think that the fact that Asian countries are trying to establish or develop their sovereign wealth funds that would invest in riskier assets such as equities, and the China Investment Corporation is a prime example, may be the main reason for the August data. Potentially the hypothesis would be that central banks are selling treasuries in order to raise cash that then would be used by those sovereign wealth funds to invest in other asset classes not necessarily denominated in the US dollar.
Of course, if a sell-off of US treasuries does continue, the US current account deficit will be financed one way or another. It has to be. You've got to balance the books, so capital will come in one way or another. How's that going to happen? We're going to see a strongly weaker dollar, that makes sense, a fast depreciating dollar, or is the US going to have to raise interest rates to try to keep that money coming in?
Well, I don't think that they will raise interest rates because it will be against their attempts to sustain growth, and clearly they care more about what's going to happen with growth than what will happen with the US dollar. But let's remember that treasuries are only one of the ways that capital is flowing into the portfolio investment sector in the US, and typically equity markets are attracting a lot of foreign capital. What's worrying is that foreigners were large net sellers of equities in August as well. This is very unusual. So probably it's because there were troubles with the U.S. stock market, with the finance and housing sector. So maybe that's why foreigners were shunning U.S. equities. And if September brings a rebound in investments, then we could say, okay, well, maybe treasuries will not attract that much capital anymore, but maybe equity markets will. However, if September brings another data showing decline in foreign ownership of U.S. equities, then I would be really concerned about what will happen with the U.S. dollar.
Okay, very quick word on China Investment Corporation. The head Lo Jiwei says he hasn't bought anything yet in Hong Kong. The bet is that a lot of the money is going to come to Hong Kong equities, but nothing yet. He also says that he will be focusing on returns, not political considerations. It's one of the big concerns in the market. Do you believe him?
I think we can believe him in principle, but you have to remember that China has already announced that about 2/3 of the $200 billion that that China Investment Corporation will have will go into probably transferring some of the assets held by the finance ministry right now. So only about $70 billion will go potentially into equities abroad. But it definitely shows that there's upside for Hang Seng, and we believe that by the end of the year we will see 31,500.
Wow, okay. Looking forward to that. Dariusz, thank you very much. Dariusz Kowalczyk, Chief Investment Strategist at CFC Seymour.